Hello, everybody. Brian here from quantlabs.net. This is my second post, probably of the week and of the day, May 23rd, 4:40 East Standard Time. And this one's going to be a dandy. And the reason I choose this one is because I know these are hot button topics that you guys like for high frequency trading. So, on this one's from Reddit, the C++ group, CPP. The title is Trading Topics for People Looking to Get into HFT. So let's talk about the typical journey most people go through on this. Well, I'm a software engineer looking to transition in the HFT space. Now, a lot of people have misconceptions about HFT, but it's not that easy to get into. It's very highly competitive, and if you're not coming from a Ivy League school, it's pretty hard to get into. But doesn't mean you shouldn't learn it on your own. There's a lot of advantages to that. If you're willing to put the concepts and put them into reality, you could do probably pretty well on it. I've been studying all my technical subjects, C++, obviously, lock-free data structures, Bing, that's a good one. Hash in general, networking and distributed system concepts, etc. I had a technical screen where I was asked about the order books. Fortunately, I know nothing about them and was advised to study some trading concepts in addition to technical concepts. So this is probably typical for most people coming from an Ivy League school, from a computer science background, but know nothing about trading. So these are some of the topics that most people need to understand before they take on these interviews in these kind of high frequency firms, high frequency trading shops, hedge funds, and the like. These are jobs that pay well, a million plus when you include the bonus and the like. I mean, I don't know now with the economy getting worse, but even half a million is pretty good as well. So my question, this is from the article here. My question is, does anyone have a list of topics from training I should know if I'm planning to work in HFT? This is going to be a good one. I'm not looking to be a trader myself. It's just hard to know what's relevant. So here's a bunch of answers. Order book related, depth of market, top of book, best bid or offer, top of book, price discovery are all terms that are defined in terms of the order book. Not only that, you also need to understand pricing matching engines, because that's what a lot of these firms are writing. If you want a really good knowledge in this space, that's probably a good way to start, and knowing how to match incoming orders and matching those optimally. That's a big, big need out there for sure. One thing you need to understand about these type of jobs, you're going to be specializing in one area of, call it high frequency trading, algo trading. You can't do it all, especially in these kind of firms, because they have probably dozens upon dozens, 100, maybe even thousands of developers. So you will need to specialize when you go out for these type of jobs. So one area is obviously order book. Some other ones that this person said, smattering other terms to investigate option pricing, specifically the Greeks. So a lot of these firms do options as well. Understanding volatility, risk-free rate, and VWAP, VWAP. So it's another, call it strategy type, I guess. But those are popular as well. So you're dealing with HFT shops that are in options, specifically Greeks. So the different parameters that come out of the pricing of options, volatility, implied volatility, let's say, and so on and so forth. Next one is fixed protocol. There's a lot of opinions on this, but let me just skip that for a minute. So continuing along with the order book, central limited order book, data structure for orders, a lot of GitHub projects that work on this, how to implement and limit orders aggressive versus passive and queue priority. So you can see what's going on here about the data patterns, the different type of strategy types for limit orders. CLOB, state machine with events. Enter order, replace order, cancel order, 7 types of results. Order enter, order replaced, order canceled, rejected for all 3, and order execute. That's all part of the pricing match engine. And look at NASDAQ Exchange Protocol for ouch or itch. NASDAQ has other documents describing that as well, along with the CME as well, has its own protocols. Most of these kind of firms are in Chicago as well. where they trade futures and options. London's another big one, but the CME is a big one. A big one. This person says avoid fix is widely used, but horrible. And I agree with that. It's you're looking at protocol from probably the 80s. It's not fun to look at. Unfortunately, probably what you'll eventually work with, because a lot of these type of firms do use fix as a protocol to send out orders. So it is a necessity. So they said here, if you want to impress, learn the sequencer pattern. This is a tidbit here. It's basically how all modern matching engines are implemented. It was developed at Island and then acquired by NASDAQ. Interesting. So these are the insiders giving you these hot tips. There's a form of event sourcing, Google it, that solves distributed determination at low latency and high throughput. Exchange systems can process millions of orders per second at microsecond speed. Interesting. Very good. Implement an IPC free ring buffer that's also listed on GitHub using shared memory and understand the cache coherency traffic. Very good. Read and understand what every program should know about memory by Drepper. Wow, that's a really good set of tips there. Okay, let's dive into Fix. Fix protocol, more challenging than it appears. Not going to read the whole thing here, but delimited by the SOH non-printable character. We often use the pipe character to represent SOH when looking at the data in human readable form. Each tag number corresponds to a field purpose. So one is the account field, Fix defines several, blah, blah, blah. I'm not going to get in that, but I'll put the link in my blog here. Look in the description of the podcast for that. And Never Fix now has several reserved ranges for internal use. So what this means is you have what is conventionally standard fix. And companies will normalize that into their own internal fix fields in the reserve one. This part is going to be something you're going to trip over, of course, because whatever company is using their own internal version of it, yeah, you won't know. It's not out in the public domain. Then we get into a thing called symbology. If you want to buy Apple, you think of the stock symbol APPL. No, I think it's AAPL, isn't it? That's not the end of it. There are standard and non-standard symbols. Futures and options also have their own symbols. APPL 05 blah 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 1446 is an Apple option. Call that expires with 144.6 strike price. This information also be spread across fixed fields. You might have to use instrument codes like RIC, ISIN, CU, SAP, SEUDL, BBG, blah, blah, blah. I'm not going to get into it. Symbology is a mess and a nuisance. You're going to have to deal with it. And there is why they pay you big, big money. All right. So when you get into that, just realize that this is what you'll end if you choose this as your career. I strongly recommend you not to have a family, and I strongly recommend that you are single because you'll be working 24/7 for this kind of cashola, and the expectation will be that you know how to perform very quickly. As an example, I saw a job description that had basically they have a trading desk, they come up with an idea on a Friday, and they want that coded within 48 hours. So what I'm saying is if it comes up on Friday, do expect to work the Saturday, Sunday. That's just the way it is if you want to make that kind of cashola. Anyways, if you want to know more, you know where to go. quantlabs.net/books. Get yourself some trading tech books and the like. This is my previous podcast on what's coming down the pipes. And we'll leave that. Just make sure you get on the newsletter. Over and out. Have a good day.